If you're watching this video, you're about to make a big shift from being a consumer to becoming a part owner of a company. Most people go about their daily lives spending whatever money that they earn, and that's why having a net worth of $10 makes you richer than 25% of Americans. But all of those consumers buying things leads to companies generating revenues and profits, which in turn makes money for the investors or shareholders. I'll be showing you how to become one of these shareholders today, allowing you to make money from everyone else spending it. We're going to be covering what a stock is, how to buy your first stock, as well as how to sell stocks down the line when you're ready to lock in profits. All you have to do is commit to this entire video. Now, before you go out and buy your first stock, it's crucial to understand what you're actually buying. Stocks, also referred to as equities, are financial instruments that represent a fractional piece of ownership in a real company. When you buy a stock, you purchase shares, and each company out there has a set number of shares that exist, referred to as shares outstanding. For example, if you wanted to invest in Microsoft stock, there are currently a total of 7,430,000,000 shares outstanding. The price for just one of these shares is $421.13, but these days, fractional shares have become very common. That means instead of having to invest in one whole share, which would cost about $420, you can invest in a piece of one individual share. Later on, I'm going to show you how to invest in fractional shares in just $1 increments, meaning you could put a buck into your favorite company if you wanted to. If you take the total number of shares outstanding and the current share price, you can multiply these together to get the total value of the company or market capitalization. Using Microsoft, for example, if you multiply the current share price times 7.43 billion, that equals roughly 3.13 trillion as the total value or market cap of Microsoft. Now, the value of these shares changes all day long when the market is open, and that is based on people buying and selling these shares. If Microsoft is doing well in reporting high revenues and growing profits, for example, more people will be buying the stock. But on the other hand, if Microsoft slips up and reports bad numbers, there will be a large supply of shares coming to the market as people are selling. The supply and demand for shares is what determines the share price, and the underlying company performance is going to influence that supply and demand. As a stock market investor, you want to invest in companies that are expected to do well over time, therefore increasing the demand for those shares. And real quick, guys, if you've gotten value out of this video so far, make sure you drop a like, subscribe, and hit the bell for all notifications. So we now know that a stock is a slice of ownership in a real company, but what exactly is the purpose of the stock market? While you might think the purpose is to make you money, the purpose is actually for companies to be able to raise money. We talked about shares outstanding, which is the total number of shares of a company that exist. But there's another important metric to be aware of, which is called authorized shares. This is the total number of shares that a company has been authorized to issue, and this is normally something that is put to a vote. In most cases, each share of a stock that you own entitles you to one vote, meaning that your percentage ownership corresponds with how much say that you have in company decisions. Authorized shares can be issued to the general public through an at-the-market offering, or they can be sold to a large institutional investor. When a company sells these authorized shares, they are able to raise new money, and that money can be used to grow the business, pay off debts, or other purposes. And all of this buying and selling of shares takes place through an exchange, which is essentially a marketplace for financial instruments. Collectively, the stock market is the entire trading network of these exchanges, allowing for individual shares to be bought and sold. Now, as an individual investor, the stock market is a tool that you have available to build your wealth. You can pick and choose individual stocks, creating your own portfolio, or you can invest in a basket of different stocks through a fund investment. One of the most popular fund investments out there is an S&P 500 ETF, or exchange traded fund. And ETFs are simply a way that you can buy shares of the fund just like a stock through the major exchanges like the New York Stock Exchange and the NASDAQ. Now, the S&P 500 is an index that tracks the 500 largest public publicly traded companies in the US. So if you invest in this fund, you own a little piece of each one of those companies. This gives you the benefit of being diversified across all of those 500 different companies. Now, if you want to learn more about this specifically, check out my full video on how to invest in the S&P 500. I'll put a card in the corner for later. But here's another important question. How do you make money in the stock market? There are two common ways for making money with stocks, and that is dividends and asset appreciation. Dividends are a way that a company will share a portion of their earnings with the shareholders, usually in the form of a quarterly cash payment. Not all companies pay dividends though, as many are not profitable, which means that they actually have negative earnings. There's also growth stocks, which are companies that are reinvesting earnings instead of paying out dividends in order to grow market share as quickly as possible. Asset appreciation is simply the value of the shares going up over time, or the old adage, buy low, sell high. In order for the stock to appreciate in value, you're going to need to have more buyers for the stock than sellers, and this will be dictated by the company performance. In simple terms, you make money in the stock market by investing in companies that are expected to do well in the future and then holding on to those shares. But how do you know which stocks are going to outperform or do better than the rest? That comes down to researching stocks, and there's no defined method for this that's going to work every single time. If there was, you would have an infinite money printing machine, but that's just not the reality of things. But here's a few common examples of what people look for. The most popular method of stock research is called fundamental analysis, and this involves looking at key financial documents like the balance sheet and the income statement. Public companies are required to file quarterly reports as well as annual reports, and this updates the general public on their overall performance. Included in these reports are those key financial documents with updated numbers. Looking at these documents will show you things like how the debt level of the company is changing over time, as well as the current trend for both revenue and profits generated. Ideally, investors are looking for companies with low debt levels that are seeing consistent growth of both revenue and profit or earnings. Another popular method for researching stocks is looking at the qualitative factors, or simply put, the non-numerical data. This could mean determining how the company makes money, what their competitive advantages are, who the management team is, and so forth. And much of this information will be found by looking at the annual report for a company. Now, beyond just looking at an individual company, another common approach is to take a step back and look at the world overall. If you're able to identify trends and then figure out what companies will stand to benefit the most from those trends, this can be one of the best approaches to picking stocks. For example, if you were able to spot the AI trend at the end of 2022 when ChatGPT was released, you could have made a small fortune investing in Nvidia stock. Keep in mind though, hindsight is 20/20, and it's not easy to be able to see these things as they're happening in front of you. There's one last thing to cover before we get into the tutorial on how to buy stocks, and that is the stock broker. When you buy or sell stocks, you do so through a brokerage platform, and that is what connects you with the stock exchange. Individual investors cannot trade directly through the exchange, meaning that they have to do so through their brokerage platform. In the past, this was someone that you would call up on the phone to place trades on your behalf and then pay a trading commission. Today, this has been replaced by commission-free stock trading apps that you can run from your phone or computer. I'm going to be showing you how to buy and sell stocks using Robinhood, the most popular modern-day stock trading app. And this is very important. If you want to get a free stock worth up to $200, be sure to use my affiliate link on screen or down below when you sign up for an account. The first step is to visit ryanoscribner.com/Robinhood, and then you're going to sign up for a completely free account. And when you fund your account, you can do so with any amount of money to get started with. Now, let's dive into the app and buy a stock. Alrighty guys, here we are inside of my Robinhood account that I use for demo purposes, and since we talked about Microsoft earlier on, let's go ahead and buy a fractional share of Microsoft. The very first thing I'm going to have to do is deposit some money here, since I currently have buying power of $0. So if I click on buying power, this will give me the option at the bottom to deposit funds from my linked bank account. Now, as mentioned before, Microsoft stock is about $420 per share, but we're actually going to be utilizing fractional fractional shares, meaning that we don't need to have $420 in order to buy a share of the stock. What I'm going to do here is deposit funds, and I'm just going to put $10 into the account just to show you how these fractional shares work. So I'm going to type in 10, click on the review button, and then I'm going to click on the transfer button to transfer $10 over to my Robinhood account. At this point, I get confirmation that the deposit has been initiated, and it's expected to complete here on June 13th, which is 6 days from today. And since we have the weekend coming up, that is why it's going to take a bit longer than expected. But the cool thing with Robinhood is if you click on this continue button, you can see that they offer instant deposits, meaning that you can invest your money before it actually transfers over from your bank account and settles in your Robinhood account. Robinhood offers instant deposits up to $1,000 for all users, and that's one of the reasons why they've become so popular. And we can now see that we have $10 worth of buying power in the Robinhood account. At this point, we're going to click on the stock chart button in the bottom left to bring us back to our home screen, and it's time to locate the Microsoft stock page. The easiest way to do that is to scroll up and click on the search icon, and then you're going to either type in the stock symbol if you happen to know that, or if you don't, you can just type in the name of the company. In this case, the symbol for Microsoft is MSFT. If we type that in, we can see Microsoft at the very top. We're going to go ahead and click on that, and this brings us to the stock page here for Microsoft. At this point, you can click around on screen here and look at the chart over different timelines, but even if we just look at this particular trading day, we can see how that price of Microsoft has gone up and down pretty much every couple of minutes, and that means that the total value or market capitalization of Microsoft technically is changing every couple of minutes based on the buying and selling demand for the particular stock. So right now it's $424.51, but as you can see, it just jumped up a little bit, and it's constantly changing as far as the quotation price for the stock. If we take a look at these other timelines here, we can see that over the last month, Microsoft is up about 4%. Over the last 3 months, it's in a similar territory. Over the last year, it's up over 28%. And over the last 5 years, Microsoft stock is up about 242%. If you keep scrolling down here, you can get this About section, which is going to tell you information about the company. So if you wanted to learn more about what this company does, this can be a great place to conduct some research there. Below that, you have stats, and there are some key statistics here that I want to point out to you. The first one is going to be the market cap. I showed you how to calculate that earlier by looking at the total shares outstanding multiplied by the current share price, but you don't have to do that math yourself. You can simply look at the statistics here and get the market cap right on this screen. Another thing to be aware of here is Microsoft does actually pay a dividend. At the bottom left, you can see where it shows a dividend yield of 0.69%. That means that if you invested $100 in Microsoft stock today, you would expect to earn about 69 cents annually in dividend payments. The volume is going to show you how many shares of that stock have traded hands today in terms of both buying and selling of the stock, and right now that's coming in at 2.51 million. You'll also see that it mentions overnight volume, and that's because Robinhood offers a 24-hour market feature where hundreds of stocks and ETFs are actually available for trading around the clock and not just during normal market hours. Below that, you have a news feed, which is going to show you relevant news that the company is mentioned in. So if you happen to notice on a particular day that a stock goes up a lot or down, going over and looking at this news feed is a great place to start to understand what is actually driving that price change. Further down below that, we have analyst ratings, and this is what the professional Wall Street researchers think about this particular stock. So at this point in time, among 57 analyst ratings, 95% view this as a buy, 5% view it as a hold, and 0% view Microsoft as a sell. Another cool thing you have here available to you is both this bullish thesis and bearish thesis on Microsoft stock. What that means is if you look at what the bulls think about the stock by clicking on show more, this is people who believe the stock is going to go up in value and a summary of why they feel that way about the stock. On the other hand, for those who don't believe in the company and think it might go down in value, the bearish thesis gives you reasons as to why the company's stock could potentially potentially go down in value in the future. So if you're looking to do research about particular stocks, it's good to look at both sides of things here to understand the bullish perspective and the bearish perspective. The last thing I want to look at here for now is the earnings section. We talked about those quarterly earnings as well as the annual report that companies are required to file. And this right here is showing you the earnings per share of Microsoft and whether or not they have been exceeding those expectations. So analysts are going to basically place bets on how much they think the company is going to generate in revenues as well as earnings per share. And then there's going to be a consensus estimate across the analysts. And then if a company is beating those expectations, that's often looked at as a positive, and it's going to cause more demand for purchasing of the stock, pushing the price higher. So we can see here that over the last couple of quarters, Microsoft has been beating these expectations. However, it has been by a narrower margin over the last 3 quarters, so that should be kept in the back of your mind if you were actually looking into this stock. On July 30th, that is when they are going to be reporting their next earnings report, and this will also be a point in time when they are supplying the general public with updated financial documents like the balance sheet and the income statement. When you're ready to actually buy the stock, you're going to click on the trade button at the bottom, and since I have options trading enabled, I can select that, but in this case we're just going to click on the green buy button, and that's going to bring up the order ticket window. It's set to dollar investing right now, which means we can invest in $1 increments. So like I said before, if you wanted to literally put $1 into Microsoft stock or any stock, for example, on Robinhood, you can literally invest $1. And in this case, you would be buying 0.00235 shares of Microsoft. However, there's a few more things I want to show you before we invest the whole $10 into Microsoft stock. If you wanted to instead buy whole shares of a stock, all you have to do is click this drop down in the top right, and you can change this over to buy in shares. So for example, if you wanted to buy 1 share of Microsoft, that would be $425.41. But before we go ahead and put that $10 into Microsoft, I want to quickly tell you about the different order types that are available within Robinhood. And to access that, you're going to click the top right button again, and you can see this list here of conditional orders. Now, by default, if you don't choose a different type of order here, it's going to be a market order, and that means it's going to give you the first available price when you are looking to buy or sell that stock. This is what most people are going to be using, and it's going to give you the fastest order execution. It's usually just a few cents difference between the bid, or what people are looking to pay for the stock, and the ask, or what people are looking to sell it for. And if you use a market order, it's going to fill somewhere between those numbers. So there might be a couple cents difference in terms of what you actually pay for the stock versus the quoted price when you place your order. For most people who are just looking to build a portfolio over time, that really isn't going to matter. But if you want to get very specific about the price that your order fills at, that is when you would use something called a limit order. With a limit order, you're going to enter a specified price that you want to either buy the stock at or sell the stock at, and the order will only execute if that price or a better price is met. So for example, looking at Microsoft stock right now, it's trading at $425.79. Let's say, for example, you only wanted to pay $425 or less. You could go up here and change this over to a limit order, and you could buy 1 share and set your limit price here to $425 flat. This also shows us here the current bid and ask price of Microsoft, so you can see there is a spread or difference there between those two of 7 cents. So if you were to place a market order, it would fall somewhere between those two numbers, but with this limit order, it would only execute a buy order if it was $425 exactly or cheaper. Limit orders are not guaranteed to go through because there's no guarantee that it's going to hit that exact price, but if you wanted to have complete control over your order execution, that might be a useful order type for you. In addition, if you plan on using the Robinhood 24-hour market feature, it is going to be limit orders only during the off-market hours, so this is an order type that you should be familiar with overall and how this works. The last thing I want to show you on this screen is they also offer recurring investments, which is going to be investing on a set schedule. This could be daily, weekly, every 2 weeks, or every month. So if you wanted to, for example, every week put $10 into Microsoft stock, you could set that up and have that working for you automatically. For now though, what we're going to do is go back and we're going to instead go ahead and buy in dollars, and we're going to do a market order and simply invest this $10 into Microsoft stock. So we're going to go ahead and click the button here for $10. It's going to be 0.02352 shares. And when you're all set, you're going to go ahead and swipe up, and it's going to send through the order. And just like that, we invested $10 into fractional shares of Microsoft, and the fill price here for the order is $424.99. If we click on done and we go back to our home page here, we can now see that we have Microsoft has been added to our portfolio. But let's say some time has passed and you have some profits that you're looking to lock in. Well, that means you're going to have to sell off a portion or all of your position in a given stock. So just to give you an example here, I own a fractional share of VOO, or that Vanguard S&P 500 ETF, in this demo portfolio. And if we click on that here and scroll down, you can see that I'm actually up 7.4% in this position based on having bought it earlier at a lower price, and now through asset appreciation, that price has climbed higher. If you're looking to sell, all you're going to do is click on that trade button, and since I already own this particular asset, I now have the option to sell, so we're going to click on that. And just like before, you can also sell in individual dollar amounts, or you can sell in shares. So it's by default going to let you sell in dollars, but if you wanted to instead sell in shares, you could change that here at the top right. And you also have all of those order types that I just showed you earlier. So we're going to go back here and sell in dollars, and just like with buying fractional shares, you can also sell these in just $1 increments. What we're going to do here is just sell off $1 worth of VOO. So technically I put $20 in, and $1.47 is going to be what my profit is here. We're just going to do $1, and we're going to click on the review button, and this is going to sell off 0.00203 shares of the Vanguard S&P 500 ETF. When you're all set, you're going to swipe up, and just like that, the sell order was completed, and this executed at a price of $492.61. If we now click on the buying power, it does show $0, but you can see where it shows $1 of cash and then negative $1 of unsettled funds. That's because you have to wait 1 business day now for your funds to settle in order to be able to withdraw that money to your bank account, for example. So if you sold your stock on a Wednesday, you'd be able to withdraw that money to your bank account on a Thursday, as long as that wasn't a holiday. And just like that, you know how to become a part owner of any publicly traded company that you deem worthy of investment. Now, as you build your portfolio, you should keep diversification in the back of your mind. Whether that means building a portfolio of stocks across various industries or investing in something like an S&P 500 ETF, diversification is very important. Once again, don't forget to use my link in the description below or on screen when you sign up for Robinhood if you want to get that free stock worth up to $200 when you open your account. Thanks for tuning in. Don't forget to drop a like, subscribe, and hit the bell for future notifications of videos just like this one. You can click below to watch my video on Robinhood investing for beginners, and I'll see you there.